Hey everybody, Rob Maurer here, and today we've got another pretty light Tesla news day, but we do have a handful of interesting industry news that we'll talk about, as well as a couple Tesla stories as well. Looking at the stock, Tesla closing down 1.9% today at $212.42 to close the day. Continuing down after hours, actually performing worse during after hours than during the trading session today, down 2.3% as I'm recording here. If we look at the Nasdaq though, the Nasdaq down about 2.4% today. This was actually the worst day for the Nasdaq since February, so about 8 months ago. So Tesla relative to the Nasdaq, obviously outperforming a bit. Nice to see that. However, disappointing to see the drop after hours. If we look at the Nasdaq today, just a tough day for tech, I think, after some earnings reports yesterday. Alphabet or Google kind of leading the charge down. Actually, the biggest drop in Alphabet market cap ever. They closed down 9.5% on the day today after reporting earnings yesterday, based on some weakness in their cloud business. So that contributing to the Nasdaq performance today. And then after hours specifically, Meta reported earnings. So that's kind of the big one for today. They actually beat expectations. So their stock was rising after hours, but during their conference call, they warned of uncertainty based off of softening ad sales that they have seen so far in the fourth quarter, which they attributed at least in part to the conflict in the Middle East right now. So just in general, some hesitancy and softness from tech earnings, I think, so far that we're seeing here. We'll continue to see how the week comes in. There's still a lot of major earnings reports throughout the rest of the week. All right, getting into a couple of quick Tesla news items. Tesla today announcing from the Tesla Europe X account that the Model Y has just broke the record for the most sold car in a single year in Denmark, which has been held since 2013 at about 13,000 vehicles by the Volkswagen Up. So Tesla surpassing that mark with the Model Y. Very exciting to see, and of course a nice milestone for Tesla in Denmark. And it looks like, it'll be pretty significantly exceeded since we still have a little bit left, a couple months left here in the year for Tesla to continue to increase that record. So nice milestone for Tesla there. And then Tesla has also been added this year for the first time to the Fortune 100 fastest growing companies list. So Tesla actually taking the number 2 slot this year. The reason they were added for the first time this year is because this list is calculated based off of earnings growth over the last 3 years. In 2019, so right prior to the period that this would be looking at, Tesla had negative earnings, of course, as they were still going through their growth ramp in a major way. Obviously, that's going to continue for a long time. But that was the flip into profitability. We know what's happened since then. So that's kind of the first year that Tesla would be eligible for this and why they are now appearing on this. As the 2023 earnings results come into play, I would expect that Tesla's growth rate obviously declines from what we had seen during this 3-year period. So we should expect this to drop next year. When it does, we'll probably get headlines about that. But for now, Tesla up there at the number 2 slot, although not something that's really meaningful, just something that will probably get some media attention here. And then kind of an interesting update again from Tesla on X, the North America account this time. They highlighted a post from the New York Daily News last week that noted that New York City is no longer going to be limiting the number of Uber, Lyft, and other rideshare vehicles on the road as long as new vehicles are electric. So this is actually a pretty big deal because those limits, if you know anything about the taxi market there, they're pretty restrictive. With this update, this means that right now this rideshare fleet is about 78,000 cars. Only about 2,200 of those are electric vehicles right now. The article here talks about in some cases people leasing vehicles that do have these TLC issued plates for $400 or $500 a week. So with the capability now to add an electric vehicle with, circumventing or going around that plate limit, should be a pretty significant boost to demand for electric vehicles, which you could already make an argument are already the most economical choice if you're doing significant ride sharing just based off the total cost of ownership and fuel savings and things like that. So I would expect that this will probably generate a pretty decent spike in orders. Obviously, it's just one city, a big city for sure, but still nice to see that in terms of probably some order generation from this change for Tesla. And then just another quick one here. Tesla has announced on the Tesla charging account on X, the first version 4 Superchargers opening in Sparks, Nevada. So we had talked about these, a few of these that had been in construction. So Tesla now making this official that this one in Sparks has opened. All right, moving into some industry news then. The biggest one for today, it sounds like the UAW and Ford are coming to an agreement. It is a tentative agreement right now that is supposed to be announced tomorrow night, or I guess tonight. Getting my days right here, but Apparently, the agreement would give Ford factory workers a 25% wage increase over the life of the contract. Originally, the UAW had been asking for 40%. The most recent offer from Ford was for about a 23% increase. So it looks like they're coming sort of in line around that 25% level. Of course, there are other things involved in the contract as well. And this will still take most likely a few days for them to sort through and then eventually vote on from members to ratify it. But this is the first sign of progress that we have seen. This seems to be the first time that the UAW has really given a counter offer that has been reasonable, or I think even a counter offer at all. So with Ford potentially on the cusp of making this agreement with their workers, I would imagine that GM, Stellantis will then very quickly fall in line, which means that we're probably very close to approaching the end of the UAW strikes at these factories. So, very good for these companies to kind of put this to an end. This has been a very disruptive period for them, as we talked about yesterday, the economic impact that GM highlighted on their earnings call. I think we've got the Ford earnings call tomorrow after market close, if I remember correctly. So I'm sure they'll have comments at that point, and that may have also been sort of a point that they wanted to avoid, kind of having this in place before the earnings update. So we'll see. We'll hear more about that, but it does, again, look like this is likely coming to an end for Ford at least, and then I would assume following quickly after with the others. All right, then we do have a few other interesting updates here. The first is from Honda. So we have talked before about Honda partnering with GM to jointly develop electric vehicles that were supposed to roll out in 2027. Honda today said that they are shelving those plans with GM due to a changing business environment. So yesterday we mostly talked about the updates from GM and their shifts in their EV plans. We've talked about that for other companies as well. But now we're seeing this from Honda with their partnership with GM. I think all of these, this period of time that we're seeing right now, all these decisions, they're going to have repercussions later on. They may make sense right now in terms of like they note the business environment, but there is hesitancy, and it's extremely clear that there's hesitancy from these other automakers, which if things change a little bit in this business environment, which they notice changing, if that kind of shifts back the other way, things like this will continue to set them further behind. So very much on theme with the updates that we've been talking about pretty consistently over the last couple of weeks. And then we've also got a couple of updates from GM. From LG today. They reported earnings. They talked about EV demand, and they said that their earnings next year could be lower than expectations relating to that, saying, quote, EV demand next year could be lower than expectations, end quote. Sorry, kind of know what I just said there, but just basically saying that the revenue growth next year would not be as high as the mid 30% rate that they have forecast this year, again, in large part due to that. So again, kind of fitting alongside what we've heard from their automakers. And, if automakers slow down their EV plans, that's going to make its way through the supply chain as well. The interesting thing is that could end up lowering commodity prices or raw materials prices or battery prices for Tesla, which could end up working to improve affordability as, of course, Tesla ramps and potentially has access to cheaper components. So, we'll see how that plays out. I think there's a lot of interesting repercussions from sort of these stories that we have been talking about. Someone yesterday said, why are we talking about GM? Things like this are why. It's all related within the industry, and competitors' decisions that affects Tesla in multiple different ways, so that it is very relevant. Okay, then they also gave us an update on their Arizona battery plant that they expect to be producing cells in late 2025. So this is actually going to be the 46 series or 4680-esque cylindrical cells that they plan to produce here in Arizona. And they said they're actually increasing their production capacity plans there from 27 gigawatt hours to 36 gigawatt hours. So not all bad news from LG in terms of their EV plans or their battery plans for EVs with this increase. And the distinction here, of course, would be that this would be in the US, which they're going to be probably driving demand significantly from the Inflation Reduction Act and the stipulations there that components and batteries are coming from the United States. So that's going to be responsible most likely for boosting these battery capacity plans in the US. But nevertheless, good to see that, and good to see that they're kind of, more confident, at least seemingly from this, increase in their 4680 plans. All right, and then we also heard from Toyota today with this current business environment. No surprise that they are crowing a little bit. So Chairman Akio Toyoda noting that the industry is coming to recognize that there isn't a single answer to reducing carbon emissions. Quote, people are finally seeing the reality. He also said that, quote, there are many ways to climb the mountain that is achieving carbon neutrality, end quote. So this has kind of been Toyota's thing the whole time. Don't go all in on EVs because there are things like synthetic fuels, things like hydrogen. This was also pointed out today by Scott Hanley, who we've heard from before, VP of Toyota in Australia, saying, quote, what you're seeing today is a car company that's not behind. You see a car company that's put a lot of investment, a lot of R&D, research and development into electric cars. But you're also seeing a car company that's being honest with the market and saying not every part of the globe can do battery electric vehicles only. Not every part of the globe. It's part of the solution to carbon neutrality, but only one piece of the puzzle. And then he went on to highlight technologies, hydrogen fuel, synthetic fuels, etc. It just goes on and on and on. So therefore, what you're seeing today is a car company that is progressive, but is also real about its future. We'll see about that. I don't know if that's really the reality that I would say, but again, with the comments that we're hearing, no surprise to see Toyota, certainly doubling down on the comments that they have made previously. All right, and then on a little bit more of a positive note in terms of industry updates, Hyundai actually going a little bit of the other way. So they're building with LG, roughly $7.5 billion battery factory and EV factory in Georgia. So they have actually given an update, said that they're going to essentially double down, trying to accelerate these plans as much as possible, that they're confident in the original date of January 2025, and that will probably be pulled ahead maybe 3 months or so, and even more if they can. So we're seeing a little bit of a bifurcation of what strategies are, with many pulling back on their EV plans. Hyundai, though, which I think has been a little bit more out in front than others, seeing this, I think, as an opportunity to accelerate as much as they possibly can. So again, the decisions that are being made now, these will have repercussions later on. And Hyundai, making probably what I would say would be a more likely to be positive decision over the long term with this acceleration. All right, and then we talked yesterday about, obviously, Cruise's situation in San Francisco. The City Council of Los Angeles today had a press conference talking about robotaxis, saying, quote, the purpose of this press event is to send a very clear message about robotaxis and say that they do not belong in the city of Los Angeles. We understand that they pose a threat to pedestrians, cyclists, and motorists, and risk putting countless workers out of work, end quote. So that was from City Councilman Soto Martinez. I don't have the first name there. I think Hugo, yeah. So that was his quote. But just in general, wanted to kind of raise this as, I think, people probably latching on to the decision yesterday by San Francisco to suspend Cruise for this period of time, and trying to use that in a way to push forward agendas to make things a little bit more difficult. Throughout this article from TechCrunch, this last point about workers specifically is one that we've talked about before, but one that now seems to be making a little bit greater of an appearance in the context of these discussions, as people start to see these services actually start taking rides and offering rides for revenue and things like that, which then, it's not a far step to say, oh, that's something that can then put workers out of work. So, this type of thing I bring up because it is going to be something that is, I think, persistent as these technologies advance. So I don't know specifically the local politics of LA and how meaningful this is, but still thought it was interesting to pass along. All right, then lastly for today, just a quick update on the Ford F-150 Lightning. They have announced prices for the 2024 model years Ford F-150 Lightnings. These are going to be increasing a bit. So the Ford F-150 Lightning Pro, that is going to be up about $2,100 from the most recent price. The XLT is going to be increasing about $2,500. The Lariat, that's going to be up almost $10,000. And the Platinum version does not have updated pricing yet, but likely following the trend of these other increases would be increasing as well. So we know Ford just spent a lot of time increasing production output. That seemingly caused a drop in F-150 Lightning sales in the third quarter, but they guided for an increase in the fourth quarter, which we'll keep a close eye on, as there have been also rumors that maybe orders there haven't been so strong. If they are then increasing prices, although the list price doesn't necessarily mean that's the price the consumer is paying for these legacy automakers that work with dealerships, we'll still have to keep a close eye on how those sales are coming in. All right, that'll wrap it up for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on X at Tesla Podcast. And we'll see you tomorrow for the Thursday, October 26th episode of Tesla Daily. Thank you.